Okay, I think we're going to get started. Hello, everybody, and welcome to Discovering Great Small Cap Stocks. My name is Alex Reisman, and I am the Communications Manager for Stock Rover. And today I'll be introducing you to the world of small cap investing, which is a bigger world than we have time for in today's webinar, but hopefully you'll walk away understanding some tips for what to look for when you're investing in small caps. Later in the presentation, we'll also be joined by Howard Reisman. He's the CEO and co-founder of Stock Rover. He's an experienced investor, and he also is very familiar with Stock Rover's roadmap. So if you have any questions at all about investing with Stock Rover, small cap or otherwise, he is the person to ask. And so you can type in questions at any point during the presentation, and then we'll answer all of them at the end. We just have a few brief items of business before we dive in. First, I strongly recommend getting the notes for this presentation. They're available at this URL shown up here. And when you come to this page, it's just the top item here. You can get them as a Word download or a PDF. Not only are they helpful for following along and reviewing later, but they're also useful because they include some tips and ideas that I just don't have time to say in the actual presentation. So definitely recommend those. And actually I'm going to switch over to, we have some slides to start with, so I'm going to switch over to that. Okay, and just to make sure that you're seeing the right thing. Okay, great. The presentation assumes you have some familiarity with how Stock Rover works. So if you're not that familiar with Stock Rover, that's no problem. You should have no trouble following along. But basically, it's not a tutorial where I show you how to use or how Stock Rover works. You'll just see me kind of using it to demonstrate other things. But if you are curious about a feature that you see during the presentation, I'm happy to demonstrate it again during the Q&A. So please ask about it. The presentation includes both premium and basic features. So if you are a basic user, some of the features I demonstrate today, particularly with the screening, are not actually available in your account. However, most of the features you'll see are included in the basic package as well. Sorry, I'm just getting a notice about screen sharing. Hopefully, okay. Hopefully I'll get it seems like you can still see my screen, so that's good. Let's see, the webinar is being recorded, and I will be sending out a link to the recording as soon as it's available. And then finally, I just want to warn you that we have, in the past webinars, been getting these brief moments of black screen during the webinar. The screen always comes back. They're very brief, but they are a little bit annoying. We've reported the problem to Citrix, and we've taken their recommended steps to correct the problem, so I'm really hoping that today we don't have that problem. If we do, please accept my apologies in advance and know that we intend to resolve the problem as soon as we can, even if it means switching service providers. So with that out of the way, let's begin the presentation. Okay. All right, here we go. So we have the agenda for today. I have about a 20-minute slideshow when we'll review the basics of small caps, including sort of their advantages and disadvantages and generally what you want to be looking for. And then we'll switch over to Stock Rover, and I have a 25-minute demonstration showing you charting, screening, and some tips for follow-up research when you do find a stock through a screener. And then finally, we have the Q&A, and Howard Reisman will be joining us for that, so send in questions at any point during the presentation. Of course, a disclaimer, nothing in this presentation is a recommendation to buy, sell, or hold particular stocks. We recommend you always do your own research when investing your own money. So the very basic of basics with small caps, what are they? They are stocks with a small market capitalization, or market cap. And market cap is just a measure of the size of a company based on how many shares are outstanding times the price of the stock. So what actually qualifies as a small market cap? Generally, you see it as anything less than $2 billion. Some people say $1 billion, so, but we use the $2 billion number. Some examples are Barnes & Noble, Ann Taylor, HubSpot, which is a Boston-based company that recently went public. So those are companies you've probably heard of, but a lot of small caps are going to be companies you've never heard of. Then you can get even smaller than small cap, or a subset of small cap is called micro cap, and that's anything under $250 million. And that's Radio Shack and Pacific Sunwear, some examples of that you might have heard of. And then you can get even smaller than microcap, which is nanocap, and that's less than $50 million. So it's still bigger than your local, coffee shop, but they're pretty small companies in the world of investing. So we're looking at Books A Million, BlackRock, Massachusetts, and Wet Seal are some examples. Here's a table. I know this is a lot to look at, but we're going to step through it. This is also in the notes. So here's a table of different small cap characteristics and then what their advantages are and what their disadvantages are of each of these. Oh, I'm sorry. Okay. We have little issues with the technology here, but all right. The first characteristic, of course, is a small market cap. The major advantage of this, and it's a significant advantage, is that the company has room to grow by a lot. And you'll see that when we chart the small cap screener, you'll see just how much they grow. It also makes the company a little bit more nimble. So rather than a ponderous large company that has, many stakeholders involved, and it takes a lot longer to steer the ship in one direction or the other. A smaller company can more easily make corrections and hopefully if it has good management, can make good decisions pretty quickly. Of course, a disadvantage to the small market cap is just that it's less proven and it's an inherently riskier investment. The next characteristic is what I'm calling the generally thin market. So it just means that these companies are smaller, they tend to be less well known, and that generally means that they're traded a lot less frequently. So they have lower trading volumes. So that's what that thin market means. The advantage of that is that a little bit of extra demand can actually have a meaningful positive impact on the price. So you can see that that just a little bit of extra good news can really bump the price up. Of course, that goes both ways. So if there's a little bit of bad news, the price can drop pretty significantly as well. Another disadvantage of the thin market is that it can make the stock less liquid. So it may be a little bit harder to buy the stock, and it also may be a little bit harder to sell it when you want to sell it. You can hedge against that by looking for stocks that have generally higher trading volumes. So that's something you can screen on or just generally take into account when you're looking at trading a stock. Below that, we have price volatility is greater than market volatility. This means that basically small cap stocks are much more volatile than the market in general. That means you have the potential to gain big. You also have the potential to lose big. There's a lack of institutional ownership generally in small caps. This isn't true of all small caps, but a lot of them don't have any institutional investors. They're not in funds. And that's because of restrictions that fund owners have on how much of a certain company they can own. So with these smaller companies, they just end up owning too much of the company. So a lot of times the institutional owners stay out of the companies until they get a little bit bigger. So an advantage that gives you is that you can beat the funds if you're picking stocks well. And if you do your own research, you might actually have an information advantage over institutional investors. So basically, you might find good stocks well before they do. The disadvantage to that is that retail investors might be a little bit jumpier. They might, panic more easily, and the stock again could plummet more easily with a little bit of bad news. The next characteristic is lower visibility in market means that valuation is less directly connected to fundamentals. In other words, the market is not perfectly efficient at pricing the stock. So there could be a gap between what the stock's real value is and what it's priced at. And like any value investor, you'd be wanting to take advantage of that. So you're looking for stocks that have not, been recognized by the market or haven't been perfectly recognized by the market. Of course, the disadvantage can go both ways. It could also be a gap where you have the stock is basically inflated. There's maybe been a little bit of hype about it, and the price is overstating the value of the stock. Likewise, you may be expecting the market to catch on and see what a great value the stock is, or what a good idea it is, and if it never does, you'll never catch up to the market. Next, we have less analyst coverage. So many small caps don't actually have any analyst coverage, but those that do, you're going to see the market is just a little bit more sensitive to the upgrades by those analysts. So, one analyst who changes his mind might have a bigger effect on the stock than if it was, out of 20 analysts. And so that of course, again, cuts both ways, but again, contributes to that volatility of the stock. Another fairly unique quality of small caps is that they're more likely to be acquired than a larger company. A company that's a promising company, if people expect that it will get acquired eventually, can actually kind of buoy it through tougher times. So that can keep the company afloat, or its price afloat. And if the stock is acquired, you do get a big premium, so that can be nice. There's no real disadvantage to the expectation that the company will get acquired, other than it's not actually bankable. The company might not actually get acquired, so you don't necessarily want to invest with that expectation because you can't take it to the bank. And then finally, the small caps tend to be a lot less likely to pay dividends. So the good side of that is that ideally they're using that capital that would otherwise go to dividends to help grow the business and get you more return that way. The disadvantage of that is not only are you not getting dividends, but more importantly, no dividends means that income-oriented investors are not interested in the stock. So there's less demand for the stock just based on that. So just a brief note about the current market context. You're probably aware that the market has been down for the past month or two. Small caps have been down have been underperforming before the market did, and some saw that as the canary in the coal mine. And it seemed that they were right, those who predicted that. So the market's also been in a rough patch, but just one thing to keep in mind is that historically September and October are the worst months for investors. So it may be that this is that we're pulling out of it, and this could actually be a very good time to buy. Of course, we never know if it's actually bargain time or if you're catching a falling knife. And we can't say for sure, but what we're going to hopefully set you up to do is find stocks that are going to be strong over the long term, regardless of how the market is right now. Okay, so what to look for in small caps. As I said before, or as you've probably come to understand, small caps are pretty much the highest stakes game, or a higher stakes game than looking at larger mid-cap stocks. So you want to position yourself well by looking for stocks that where the founders are invested in the company. And actually, if you're following along in the notes, there's a table for this, and it's below the screening section. So that's where you can find this information in the notes. So you're looking for founders who are invested in the company as well as a normal level of insider selling. And so a guideline for the investors, you'd want to see maybe having a 3 to 5% share in the company. That's not a hard and fast number, but just a general guideline. Some insider selling is very normal, but if it looks like it's increased, or there's just an exceptionally high amount of insider selling, that would certainly be a bad sign. You want to look for solid financials, so financials that have been good, a good track record, as well as financials that have been improving over time, and that's critical. And things you'd look at for that are some income metrics and efficiency metrics, and definitely that time factor is really important. So looking at how these metrics, not only how they currently are, but how they've changed. You want to look for companies with a manageable debt load. What you'd look for there is probably companies with a debt to equity of around less than 1. Or you could see if they have a high amount of debt, but debt is decreasing over time. That's also good. You can look at the interest expense and make sure that it's less than 20% of operating income. Essentially, you just want to get a sense of how much of the debt is encumbering the company, and you want to make sure that they can handle it. You want to look for stocks with a reasonable price considering their growth. So the metric we're recommending for that is the PEG trailing, and that compares the valuation to expected growth, and the trailing looks at growth that's already on the books, I guess. But you want to look for, we say 1.2 as a generally good guideline. So lower PEG trailing is best, and anything under 1.2, if there's good growth prospects, is a pretty good value, or is pretty inexpensive. And then the next we have competitive advantage. Excuse me, I'll just take a sip of water. Okay, sorry about that. Okay, so competitive advantage this is where that soft research comes into play. So you're going to be looking for companies that are well positioned in the market space. They don't have to have something completely unique, but you do want to understand what is their angle on the market, what are they doing better than other companies in the same space, and are they profitable? Excuse me one more second. Oh, sorry about that. I can never get through a whole webinar without taking a break. Okay, so competitive advantage. Yeah, so this is, again, soft research, so you'd be looking at really, there's not numbers you can look at for this. You're going to look at the company's website, what they're saying to investors, their 10K forms. You're really going to try and understand the context of their business and sort of how well they seem positioned within that context. And then finally, and this isn't in the notes, but I wanted to add in, you're looking for companies with the trading volume we're recommending is at least 5,000 per day. Probably more than that if you're concerned about liquidity, but that would be a general, anything under that is going to be fairly illiquid and hard to buy or sell. And then one more, okay. Just a few more notes on research before we switch over to Stock Rover. So I say small cap, not shortcut. Research is just incredibly necessary when you're looking at something as risky as small cap. So not only do you want to do the quantitative research, but you also need to do that qualitative research I mentioned before. You can give yourself a head start by focusing on businesses and technologies that you can understand. So that way, when you're already sort of understand how a business makes money, you have an understanding of the context that the business operates in. It's just going to make it easier for you to make your own critical conclusions about a company rather than relying on somebody else. Somewhat similarly, you might want to avoid the bleeding edge technologies or so really new technologies. When that's combined with a small cap company, it becomes really a gamble. However, if you are very knowledgeable about that particular field and you have some special knowledge about why that technology is likely to succeed, of course, then you might be better off investing on it than in someone else. So another thing to keep in mind, and this is one thing when I was researching, I've learned that people invest in small cap with the idea of sort of wild runaway profits. And of course, that's not really a great thing to expect anytime you invest. So be patient and strap in for an occasionally bumpy ride. It's definitely, they are more volatile, so they will take you on a bumpier ride. And that said, we are focusing, there's a little bit of a bias in this presentation toward a longer term outlook. But you can also, if you're interested in shorter term investments, that's fine too. You're probably just going to be a little bit more sensitive to technicals and any market research that you're doing. So just be aware of that's going to give you a better sense of those entry and exit points. All right, so let's switch to Stock Rover. Okay, and I'm going to take one more sip of water and then we'll start the presentation here. Okay, so here we are in Stock Rover, and I just want to double check that you're seeing. Okay, great. So you're seeing my screen. The first thing I want to show you is that I've created 3 screeners that filter for small cap stocks. We have the micro cap, nano cap, and small cap. And the small cap just looks for stocks that are above a micro cap but below that $2 billion threshold. Nano cap looks for anything below $50 million, and micro cap's looking for anything between $50 million and $250 million. So I've run those. That's the only criteria to pass these screeners. So any other all stocks that meet that criteria pass them. And then what I've done is I've charted them. So you can see this is a 2-year period versus the S&P 500. And in all cases, the stocks that are currently passing this screener are beating the market or have performed better than the market over this 2-year period. If we look at the 5-year period, and it's taking a little while to load. Okay, the 5-year periods here, I'm going to set the S&P 500 as a baseline, although it already looks pretty flat. You can see very clearly that the micro, nano, and small cap screeners, those stocks have historically performed better than the S&P 500. So that's very appealing. And this trend is even more pronounced when you look at a 10-year period. And you'll see that nano cap in particular is just kind of rockets up. However, you can still see a lot of that volatility. Even when other things are very flat compared to it, you can see that it's very volatile. So that's that risk that you're taking on. But of course, if you pick something good within that, you can do very well. So that's just to give you, after all the warnings about how risky they are, this is the reason that people are interested in small cap, because they can perform very well. The other thing I've done here, and I'll just clear the chart, is I've created a watch list of, oh, that's weird. Oh, because I filtered these. Let me just clear these filters. So I've created a watch list of different index funds for small cap stocks. And these are not all the index funds that are available, but you can use these ETFs as indices to compare them against. And I'll put this watch list in the library so you can download it if you'd like, or you can just find them in the ETFs section of Stock Rover. And I'm just going to chart all of them. So I'll clear the chart. And so this is over a 10-year period. We'll switch to 5 years. You can see they all follow the same trend. The value stocks value has been down compared with growth, so it's been out of favor, whereas the growth philosophy has been in favor. So the IWN, that's a value fund, whereas IJT, that seems to be the best performer, that's a growth fund. So there's a little bit of context there. I don't want to spend much more time on it, but I did just want to show you that that's another way you can gain some understanding of what's happening with small caps. All right, so the next thing we'll do is take a look at some of the screeners that I've created. So let's load them here. The first screener here is the small cap rocket screener, and this actually comes with Stock Rover. It's a basic screener, and it's actually one of our best screeners. You'll see we can chart all of them. Let's chart all of these together. You can see how well they do. So I'm going to chart my 4 small cap screeners here. And what's nice about charting the screeners is that it gives you a sense of, when you've, say, created a new screener or modified them, you can see if the new criteria is producing results that, look good to you. So, for example, if you've created a momentum screener, you expect to see some momentum happening more recently. So you can see that the small cap rocket screen has done really well. But they've all performed well, and if we add in the S&P 500, I believe all of them beat the S&P 500. Yes, they do, so that's a good sign. So these screeners at least are starting us off on a good foot, hopefully. So revisiting this, so looking at this tooltip, it's going to tell us what's in this screener. The first criteria, of course, is the market cap has to be less than $2 billion. And then below that we have the sales 1-year change has to have increased by, has to be a 15% increase. And then the sales 3-year average change has to be at least 12%. So those are pretty good, strong numbers. And what we're trying to get at is that the more recent sales has to meet a higher standard than even over the last 3 years. And that's also true of operating income and the EPS. So those are good, strong sales numbers that we're looking for here. And then below that, we have the price versus the 52-week high, and that's getting at that rocket piece of it. So we want the stocks that have momentum, stocks that are at least within 85% of their 52-week high. And actually, if we run this screener, I think only about 13 stocks are passing right now. And if you run this, earlier in the summer, you'd probably end up with many more stocks just because the market's been down. So there's not that many stocks that are closer to their 52-week high right now. The last 2 pieces of criteria here is the 1-year return versus the S&P 500 has to be at least 5%, and over 3 years it has to have outperformed the S&P 500 by at least 12%. So basically we've set it up to find pretty strong stocks that are also experiencing momentum. The next one we'll look at here is small cap value, and this is a pretty basic value screener. It's also part of the basic package, so it's a default screener with Stock Rover. It has price to earnings, price to sales, and price to book, all fairly low as a way of getting at that inexpensive valuation. And then it does have just a little bit, the EPS 5-year average and the sales 5-year average to look for stocks that have at least been increasing earnings a little bit. And then jumping down here, we have the Buffettology Inspired Screener. And I know that looks like a headache, so I'm actually not going to be going through all of that, but I do just want to run it. I'm going to put this screener in the library so you can take a moment to kind of read it on your own. It's inspired by the book called Buffettology, which supposedly looks at Warren Buffett's strategies. But one thing, this is actually not a small cap screener, but just a tool I want to show you that you can use. So we have 144 stocks passing this, is to set up a filter. So if we come to the filter button here, we can go to market cap. Oddly, I must have accidentally gotten rid of it. Sorry, one moment here. Add market cap back in. Oh yeah, I removed the column as opposed to removing the filter. Okay, so here market cap's here, and I can add in a filter and make sure everything here is less than 2 billion. Okay, so now we're looking at 22 rows that currently pass this Buffettology screener. So really that's just a tool for showing you that you can find stocks that have a market cap of less than, basically you can turn any screener into a small cap screener using the filter feature here. So moving on, we'll look at the small cap value quant. We have, again, this has the value criteria. This is, if you're following along with the notes, this is changed slightly from what's written down in the notes. First, it has the 1-year return versus sector has to be greater than 0. So that's a pretty low bar. We're just saying it has to have not underperformed the sector in the last year. You can, of course, make that much more strict if you wanted to, or have it not outperform the sector over more years. But just very simply, it has to have outperformed the sector in the last year. The next is the equation, which is we're looking for stocks that have an ROE, a current ROE that's greater than last year's ROE, and also that's greater than 5 years ago. And if you jump down a few, you can see that we're also looking for stocks that have a current ROE of over 15%. So ROE is definitely a major component of this screener. And that's a profitability metric. And then when you kind of compare it across time, it becomes a measure of efficiency, if efficiency has been increasing. We have the price to book less than 1.2, price to earnings less than 10. So again, those valuation metrics, looking for an inexpensive valuation. And then this is also a quant. So what we're doing with a quant here is rather than using growth criteria, too much growth criteria in the actual filters, we're saying that any stocks that pass those filters will then be ranked according to some growth metrics, such as the EPS 5-year average, the operating income 5-year average, and the sales 5-year average. And then we also have earnings yield and EV over EBITDA included as another way of incorporating valuation into their quant. And if we run this, so we get 47 rows, and I'm actually going to just clear the chart and link it to the table. Because this very first one I want to walk through, it's called Advanced Battery, and you can pretty easily see that the chart is actually kind of terrible, and it's an incredibly cheap stock. So this does not give me much confidence in this company. Other things I'm going to notice about it are that it has only 4 employees listed, and as the volume, this is the current day volume, but what you might want to look for is the average volume. So let's look at it's the top one that comes up here. And let me move that over. Okay, so now we can see its current volume of today's volume compared with its average volume, which is really a more reliable metric because this volume changes throughout the day and can be a little bit spotty based on the data feed, especially for smaller stocks. Anyhow, it's a little bit, there's something a little off about this. I'm seeing a really poor chart and only 4 employees when it's got $31 million market cap. So in this case, I probably wouldn't go further with it. But if I did get curious about that, I'd want to look into why are there only 4 employees. In this case, I think it's a company, it's a holding company for some Chinese company, and so there might actually be only 4 employees, but you'd want to dig into those SEC filings to see more if you were interested in learning a little bit more about this company. Also, you'll notice that some of these other companies that pass. Some of them have very low volume. So for example, this cross-border resources, the average 3-month volume is less than 5,000. The current volume over today is 0 or probably very close to 0. It's got a market cap of 21. It's got supposedly 5 employees. So already I'm a little off-put by this company. I don't have a good feeling about it. And it's just not very liquid. So what I might do now is add in a filter on volume and say it has to have a volume above 5,000. And you can, of course, add that into your screener as well, but I just wanted to demonstrate where you can find that information in the table. Okay, and so there's one more quant I want to go over, which is the growth quant here. So this is basically just another quant with a more of a focus on that increasing trend in growth metrics. The first one here is the 1-year return versus sector. It has to be above 0. So again, just looking for companies that have not underperformed their sector over the last year. A debt to equity that's less than 1, so debt does not exceed equity. Operating income, and this is an equation, operating income, the 1-year change in operating income has to be greater than the 5-year average increase in operating income. And same goes for sales and EPS. So in that case, we're comparing the sort of current number against the average and wanting it to be greater. So getting at that upward trend. And then the next one there, it's a little bit ugly on this tooltip, but we're looking at the return on invested capital, which is another nice profitability metric, and we're comparing the ROIC against the average ROIC over the last 5 years. And I've just created that average by adding up the ROIC over the last 5 years and dividing it by 5. So I actually like doing that a little better than, for example, what we did in the value quant, where we have ROEs compared with last year's ROE and with 5 years ago. Comparing it with the average still gets at that upward trend without relying on, because those numbers can kind of fluctuate a little bit. You can, if you're looking at the average, you just want to see that it's increasing above its average. And then below that, we'll look at the quant rankings. So in this case, we have quants on the quant weights on the EPS 5-year average, the operating income 5-year average, and sales 5-year average. So not only do we want it to see increasing from those numbers, but we're also going to place importance on those being high. I ran this before, and I had created filters where I said, the EPS 5-year average has to be at least 10, for example. But what I was finding was that was actually cutting out a lot of stocks. So that's why I've included these numbers. I'm using the quants as a way to not filter out stocks, but just rank them. So if they have good EPS numbers, they're going to come up higher. I'm also incorporating a little bit of valuation with the EV over EBITDA, and PEG trailing have to be low. That's added. That's 40% of the quant rank. So let's run this one. Okay, so the first company we're seeing here is something called Gluskin Sheff. And if you mouse over the rank, you can see more information about why it scored the way that it did. For now, we won't look at that. We'll just take a few moments to kind of explore how you could learn a little bit more about this company. So the first thing you might notice is its chart looks pretty reasonable. You can see it's volatile for sure, but it has been increasing. We can add in some benchmarks, such as its sector and industry, and see that it's been outperforming those. It looks like it's not necessarily outperformed its industry, but it overall in the last few months at least has outperformed its sector. And you could set those at 0 if you wanted a really clear picture. We can also add in a metric package or some fundamentals through the fundamental metrics here. And I created one called small cap efficiency. And when I chart that, I'll just expand this a little. So when I chart that, that gives me, again, a quick view. I can kind of easily assess if these numbers are looking good or not. So I can see the ROIC has certainly been increasing. The operating margin has been increasing. And sometimes you want to kind of mouse over it just to make sure. Like, for example, here it's above the current number. EPS has been increasing, it looks like, although it's come down from the last few years. And then sales per employee has also increased. So those are just some metrics. You can, of course, create whichever ones you like to see. It's really just in a visual format. All this information is also available elsewhere in the product. So let's open up the Insight panel and learn a little bit more about this company. So it looks like it's a wealth management firm. I can go to its homepage by clicking on the link here. And that would be one of the first things I'd like to do, is just see how do they present themselves to the world. They have a really nice looking website. They have this thing called investing here, but since it's a wealth management firm, that's actually not what I'm looking for. I'm looking for where they're talking to their investors directly. And this is, it's down here. It's a little bit hidden. It's just their ticker, and they're on the Toronto Exchange. So here's where I can get some information. I have their press releases, financial statements, management information circulars, stock information. So here's where I can get this kind of information, which becomes important because we actually don't have, for example, if you link to their annual reports, we don't have a link to them. So and that's something you might run into when you're looking at small caps. There's just less data. Sometimes they're on a foreign exchange and they're smaller. We might not have what you're looking for. Likewise, for example, major holders, there's no information here. So that's information that you're going to have to dig for through using their website. We can still go over to the detail tab, and we'll start by looking at analyst estimates here. What we're seeing is that a few analysts do follow the stock, so that's good. It's usually a good sign. And we can see how the analysts have been changing their views, if at all, on the company. That's helpful to see. We can look at their growth numbers and see that these are very strong numbers, so that's good. We can come into their income summary and start looking at some of these numbers. And basically what you'd be looking for here, I'm just going to open this up further, is just comparing. Again, you want to look across, not just look at this column, which is the most recent data, but compare it across and see how have these numbers changed over time. So we're seeing that sales has increased significantly from 2006, so that's a very good sign. So those are the kinds of things you'd be looking for. I want to run through another quick example that has just a little bit more data for it. So let's go to Anika Therapeutics here. And I can actually open this a little bit. And so Anika Therapeutics is in healthcare, which I did this off stage, but I did a comparison of all the sectors. And healthcare has been the strongest performing sector over the last 5 years, and it's consistently outperformed the S&P 500. So already I'm feeling pretty warm about healthcare. It's passing basic tests, like the average volume is pretty good. And then if I've charted it here since they're linked, you can see that, let me close this so we can get a better look of it. You can see it's really strongly outperformed both its sector and its industry more recently. So that's a very good-looking chart. And then we can again look at those metrics down here, see that they're all increasing. So far on that quick look, it's looking pretty good. And we'll open up the Insight panel. Again, we would want to go to their website here. And on their website, has that sort of wholesale feel to it. We have investor relations right at the top, so very easy to find. And then quite a lot of information here for investors. So you can listen to the conference call. You can read news releases. They have lots of information for shareholders here, information about corporate governance. You can also link to their SEC filings here. You can also link to those from Stock Rover. But in any case, they're making it very easy for investors to find information about the company, or so it seems. So that's I'll take as a positive sign. You can read the description that we have here. It's a little bit longer for this one than some other ones, but it actually does contain a lot of helpful information about the company's background, so I recommend that. Major holders, we'll open this up. And you can see that the percent of shares held by insiders and 5% owners is 18%, which means that which is strong. That's good. So we're seeing that the insiders are invested in the company. We're also seeing that there's actually some institutional ownership here as well, which is not typical for small caps. And so you don't get that benefit that we talked about earlier with the lack of institutional ownership, but I would say it's generally a good sign that institutions are interested in the stock. And then you can get more specific information about who those major holders are. Insider transactions, if you open this up, you'll see at the top how many sales have occurred in the last 6 months, not very many. And then what you do is just scroll down just to make sure there was nothing suspicious happening or significant sales happening at any point. Annual reports is a pretty important one as well. So you'd open this up and get their annual and probably quarterly reports you'd also want to look at. And so you open this up and you'd get, this is their 10K form from last year. And this contains all kinds of really critical data, all that soft research that's going to help you understand the company, the company position, its competitors, et cetera, if it's overpaying its executives, things like that, all things that are important to you as a shareholder. This one's quite nice because you have these links to different elements here. So you can look at the risk factors. There's something with legal proceedings. I'd be interested to know what's going on there. Here's the executive compensation, information about corporate governance. So this is all stuff I'd want to read. If you scroll through it, it looks really kind of daunting. But if you're jumping to the parts that are interesting to you, or questions that you've developed as you've researched the stock, it's not too unwieldy. And so we'll come back into Stock Rover. So that said, I personally like to go to the annual report after I've learned a little bit more about the company. It just gives me a basis for, it helps me form some questions, and then I can come to the annual report with some questions like, well, it seems pretty good, or why was there that jump in sales or that reduction here? Anything that seems out of the ordinary, you can search for those answers in the annual filings. So here we are again in the detail tab. We'll just open up balance sheet, and here you'd be looking for things like cash. You want to look at the debt and see how that's changed. In this case, this company has almost no debt. In the few years that they did have debt, it was very low, and their interest coverage was very high, so really no problem at all. So those are the types of things you'd be looking for. You'd want to go to the news tab. You can get ticker news for Anika Therapeutics and see and read some of these what's happening in the news regarding this ticker. You can go to the peers tab, and this is going to open up all the peers for this, all the industry peers for this company, which in many cases are going to be much larger than small cap. So what you might do is look at its market cap, which if I mouse over it, I can get. And I can see that it's 578 million. So what I might do here is just filter on stocks that have, are between, say, 400 and 600, and just see what its peers are in that space, or 500. Just type that. Okay, so that reduces it. We can see what are its immediate peers in terms of market cap in the same industry. And so that's where I'll actually leave you with the presentation. And then I think we'll open it up for questions. And so I'll invite Howard Reisman into the conversation.
Thank you, Alex. That was really wonderful. I enjoyed listening to it.
Oh, good. All right, so let's see if we have any questions. Okay, so we have just a few questions have come in. Well, first of all, I wanted to ask if you had noticed during the presentation, or if there's any specific guidelines that you would follow that maybe I didn't already mention, but just in terms of certain metrics, like what would be good or bad numbers to look for?
I think you actually did a really nice job of covering that. I mean, the things I definitely look at in small caps are the efficiency metrics, which you looked at, ensuring that they're improving. Definitely concerned about debt, and if they do have debt, whether they can handle the debt load. So in other words, perhaps ensuring that the debt is no more than 20% of their operating income is a reasonable guideline, so they're not hamstrung by that. I think that's pretty critical. I think that obviously you're going to want to be looking for a good sales story, good efficiency, that the sales G&A expenses aren't growing too much faster than revenue, and that they're on the right trajectories, basically. And I think you covered all that quite well. I certainly would look maybe at the industry deciles, which you did not cover in some of the views, and see kind of where they rank. I don't know if we have one by default, but you can. Oh
yeah, well we can add them to this one.
Yeah, so you can compare how the company's doing versus its peers in a number of measures, such as you can see them all: growth, price to free cash flow. I think those things are all pretty important. Mm-hmm. So I think with small caps in general, I'll just echo what you said, which is that you really have to look at a lot of stuff, and I think you have to get deep into the website of the company and the 10K and 10Qs and see how they talk about themselves and what their competitive issues and concerns are to get a comfort level on the company itself, because its viability is is much more questioned in a small cap. And if you're looking at a company like McDonald's in the large cap space, you're not worried about the viability of the company. You're worried about whether the stock is priced appropriately given its business performance. But small caps, there's larger concerns, and I think that you just have to dig deeper.
Okay, so the first question we have I can actually answer, which is, will your screeners be available in the library? And someone else has already looked in the library for them, and they're not yet available. They will be available. I'll do that today. I just might, I didn't post them yet because I was maybe going to make a few small changes. I'm not going to put the small cap, micro cap, and nano cap. These are very simple screeners that you could easily do, so those won't go in the library. But I will be posting, although these ones down here, the small cap value quant, the growth quant, the Buffettology inspired. I'm also going to be including the Petrosky small cap back test, which we just had a blog article on the Petrosky screener. Is pretty interesting, and what you can do with this is that it looks at it for small caps and sees how the companies that would have passed this test 5 years ago, how are they doing today is basically what it looks like. So I'll include that too. I didn't talk about that in the presentation, but it's useful if you are a premium user. It can show you how to kind of create a back test with our screeners. So yes, I will include those in the library. I apologize that they're not up yet, but I will do that as soon as I can. And for those of you, if you don't know where the library is, it's up here in the top toolbar. And if you come in here, you'll see screeners is the first one. You'll see these last modified ones, and you can get screeners here. You can also get portfolios, watch lists, etc. If you've deleted the defaults, such as the small cap rockets, you can get those in here in the defaults tab. Okay, so the next question is, I was wondering how reliable some of the data in your screener filters are. For example, employee count.
That's a very good question. I mean, the reliability of the data, I think, is generally very good. The source of the data is Morningstar, and their data is usually quite good. But I think there are instances where clearly, and I think that's true of all financial data at all websites, where there are instances where the data is wrong. Sometimes the company posts it wrong. Sometimes the feeds are incorrect and get corrected later. So I think if you see a number that looks a little out of whack, I definitely would try to verify it with a secondary source. But I think in general the numbers are quite trustworthy. But if you're concerned, I would urge you to check, check and check again.
And if you are, if something looks wrong to you, just let us know and we can investigate. And if it is an error, we can usually correct it. So
right.
We definitely like to know if there's errors in the data. So the next question is, this is a good one. Won't rocket screeners always look best because you are showing the best momentum stocks currently, which might not have been the same list over the previous 5 years?
That's definitely true. I mean, when you're doing a momentum screener, you're basically picking stocks that by definition have outperformed, so their chart is going to look fabulous. So the real question when you do that is whether the momentum is going to persist or not. And momentum, it can vary obviously, but it generally has a reasonable life, longer than you would think. So often companies that have momentum will continue the momentum, but I mean that's one of the things that, and then it'll just stop, and when it stops, nobody knows when or why. So I think it's important when you invest in momentum in general, but that's always an inherent risk. So what you're really betting on is basically the train's out of the station, it's got speed, and you're jumping on board. You just don't know when it kind of is going to stop. So that's always a risk with momentum. Yeah, by definition, momentum screeners are going to look great when you look at them in the past.
Mm-hmm. And with the rockets, I think they were performing well over. You saw them really take off in those last 3 years, which was fairly baked into the screener. It was,
Yeah, let's bring up the criteria in that
sure.
one, because I think there was other things besides momentum.
Well, it compares to the so the 3-year return has to be outperforming the S&P 500 by 12% as well.
Right. So by definition, you guaranteed stocks that are going to look good if you go backwards. The idea is that they've got a track record of growing and outperforming, and if you do your research, the idea is that, particularly in the small cap sector where there's plenty of headroom, that the bet is that that's going to continue. So no question, it's not back tested. I think that That's a whole other subject. It's something we will be adding to Stock Rover, which would be selecting the stocks that would pass based on the data 3 years ago. But this is, again, a form of momentum because you're betting that the trends in place are going to continue.
And if you are a premium user, you can create something like a backtest by screening on historical data and seeing which stocks would have passed 3 or 5 years ago, based on the values from 3 or 5 years ago.
Exactly. Erica did some incredibly clever work with that, which created backtesting before we did the feature, which is doable with equations.
Mm-hmm. And so you can see, as an example of that, you can download the Petrosky backtest screener and see kind of how I did that. And yeah, so it's a pretty addictive thing to do, actually. I got very into it. The next question, sort of similar. The Rocket screen has not been a static list over the previous 5 years. Does the screener show the previous stocks in the list? So we've already answered that, but
yeah, they don't. But one thing you can do, which is to kind of create your forward back test, is you can run a screener, put it in a watch list and date it, and then going forward, you'll see how that performs. Now, obviously, you're going to be limited by the amount of time that elapses, but it's kind of a poor man's way of getting back testing before we have the actual feature. And I do that quite a bit with my own watch lists. I'll have select a bunch of stocks that I think look good, put them in watch lists, label them, and then watch how they perform going forward. And you can definitely learn something in reasonably short periods of time.
Okay, so the next question is, how can I get the watch list for different indices and the Buffettology-inspired screener? So again, I'll be putting that in the library. And when I'll send out an email with a link to how to get stuff from the library. So when I send out the email, you'll know that they're in the library. So I would just wait for my email. When you get that, you can check the library and you'll see the watch list and those screeners. I have a note that there were some typos in the notes. I apologize for that. Normally I would spell check. I apologize. The next question is, can you create a screener to sort the rankings of a company's founder, CEO, etc., based on their achievements, awards, success in other companies they may have been a part of? I know it's subjective, but this should be a big consideration when investing for the long haul.
Yeah, that's a really good question. It'd be great if you could. The short answer is no. I mean, that's where the subjective part of research comes in with, particularly with small caps. You've got to really research the team. I mean, I think what you really want to do with small caps is use the quantitative measures that, as Alex described in the webinar, and then narrow it to a set of candidates that look intriguing to you, and then you should go in and do the research to determine, what you think of the management team and their achievements and capabilities, and that's where you make your investing decision as to whether they're worthy of capital or not.
Next question. Typically, is there much movement in a small cap's price before institutions begin to buy?
That's a really good question. I would say it varies. I mean, I think there's probably indications like volume creeping up, starting to creep up on a stock. I think would be an indication of accumulation by larger players, and I think you would probably want to keep an eye on the volume over time, which you can chart. That would certainly be one indication. I think that price would probably follow volume if it's accumulation. If it's distribution, the price is going to follow volume, but it's going to be going in the wrong direction. So that would be one thing I would look for. Obviously, institutions are going to buy, in general, more shares than retail investors. So I think when you start to see volume increases, that could be a tip-off. But I don't think there's any surefire way. I just think that would be one thing I'd look at.
Mm-hmm. And if you missed it, I just went to the technicals link here, menu here, and selected volumes. That way you can chart the volume below, and that can be a nice thing to do just to get a sense of, if that 3-month average is, because of one crazy trading day, but you'll get a sense of the average volume for a stock.
Yeah,
and the direction of it.
The volume's a little clearer. Like if you do like 3 months or say, you'll get a better idea of volumes creeping up. That, for example, that stock seems to actually have decreasing volume over the last 3 months.
Mm-hmm.
But,
is it possible to export Stock Rover charts to PowerPoint?
Not directly. You would actually just have to take a picture of the chart by snapshotting it and then import the JPEG or PNG into PowerPoint. So no, not directly.
How do you enter industry and sector benchmark for stock in the chart panel?
You can demonstrate that, Alex.
Yep, so that's just through the benchmarks menu here. You can go and select the sector and industry, and it's always going to relate to whatever ticker you have in the leftmost position here. That's called the primary ticker. So what's nice about that is if you switch tickers, it's going to switch alongside with that ticker. So now we're looking at the correct industry and sector for that ticker as we've changed it. So that's one way to do it. Another way to chart industry and sector is to just go through to find them here and right-click and select chart. So that's another way to do it. But that won't be dynamic based on the ticker you have charted.
Yeah, the advantage of doing the benchmark way is as you change the ticker, the industry and sector follows and makes it very convenient.
Is there any option-related data?
Not currently, no. I mean, it's something that is on the roadmap. We've been asked for it a lot. Options data is quite complicated because one security such as Apple can have many options, many strike prices, many contract dates, and it's all can be, and some of them can be quite low volume or no volume. So it's really a pretty daunting thing. But we do, with that said, it is something that we want to address in the long term. So Stock Rover.
Okay, this comes from one of our Canadian users. Why is there so little information available on Canadian stocks like the GS, I'm forgetting the name, Gluskin Sheff?
The Toronto Exchange. I think that one actually had pretty decent information except in the filings. And it's probably because it's a Canadian company trading on the Toronto Exchange and they are not by any means required to file to the SEC. I mean, I think all that stuff in Edgar is really on U.S.-based companies, so they wouldn't have any requirement to do that. And we don't have the links up to go to the equivalent filings in Canada. So you'd have to really go to the Canadian websites directly to get that. I think that's just a function of being a Canadian company on the Toronto Exchange.
There is a 30-unit limit on watchlists and screeners. Can you delete screeners you use infrequently and add more from the library to replace them? And can you put your own screeners in the library?
Yes and yes. There's a short one on that.
Yeah, so a few different tips for you on this. One, definitely you can delete anything you're not using, so just come here and delete it. The other thing you can do if you want is to export the screener. So let's say it's something you use infrequently but you don't want to lose it altogether. Just export it, save it on your computer, and then you can import it when, if you decide you want to use it again. So that's a nice trick for beating that limit. And then we definitely encourage you to send in your own stuff to the library. You can see at the bottom here, there's a link that says suggest one of your own creations for the Stock Rover library. So if you have a screener that you like, just send it in through the suggestion. You'll see that when you open that up, you'll get a little list of all of your current screeners, and you can say which ones you want to submit, and then we can post them for you. And then anybody can download them in Stock Rover. So that's the trick with that. Let's see. Would like to be able to easily download, would like the ability to download your recordings, so I do not have to view them all at once. Is that something we can do?
That's a good point. I mean, we can do that via screencast. I'll take that on board. There's an ability to create a download link. We haven't done that just because we weren't sure that users would want to take the whole recording on their onto their computer, but certainly that's something we can do. So we'll give that some thought as far as changing the site to do that.
Okay, and we might be able to just email it directly to you, I think, right? If that, I don't know if you...
Yeah, well, it's huge, so I think the easiest way is to download a link on Screencast.
Okay, okay.
We just have to expose it. I'll make a note of that.
Okay. How many industry groups in your collection, and who provides those groups?
How many industry groups? Well, I mean, the way it's broken down is that I believe there's, 11 sectors, and each sector has an industry, a set of industries, and that varies by sector. Is that what we're talking about, basically?
I'm not sure. Why don't if you can clarify on your question, we can come back to it. So the next question is, how do I get the notes? And the notes are available. I already have the tab open here at this website, oh, goodness, URL, stockover.com/webinar-outline.html, and then it's the top one here, and you can download it in either form. How come sector and industry are sometimes grayed out? I'm also not sure where that would be. So if you can clarify where you're seeing them grayed out, we can answer that question for you. Can Stock Rover generate email notifications to events like, for example, price to free cash flow going down significantly?
It can. The short answer is not that one. It can do, I think, price to earnings. If we go to alerts up there, and yeah, so you can see all the alerts we can create. The alerts facility is now out of beta and available to all premium users. And we're probably going to make it open it up to basic users next month for a few weeks to let them take it out for a spin and see if they like it. But most everything is based on price. There are some nice things such as crossing simple moving averages and exponential moving averages, which can be good for getting signals. But for example, there is, I believe, regarding kind of fundamental stuff such as earnings, the only one we're currently supporting is price to earnings, getting an alert if it exceeds or goes below a certain value. But this is version 1 of the alerts facility, and we're open for suggestions and ways of enhancing its capabilities, so we'll certainly take that on board.
Great. The next is just a comment thanking me for my effort on this. Thank you very much. I'm glad you enjoyed the presentation. The next comment is, will Stock Rover include international stocks in the future?
Eventually, we hope to. I mean, it's really dependent on demand from our customer base, of which there's been some, and the cost of and reliability of the feeds, of which, unfortunately, in the financial world, each separate market is a separate feed. So we would have to pick which international exchanges that would be kind of the highest value ones to go and do them one by one. So it is in our roadmap to expand it, but honestly, we're really focusing on building the platform out for North American investors initially, and then once the foundation is in place, it'll be easier to replicate internationally.
Great. I'm not sure I understand the next question. Are you seeing it that M asterisk and VL have different numbers?
We have different number of sectors and industries.
We can take,
sure.
Yeah, we can take that offline,
yeah.
and because I'm not sure how to answer that one now. What is the status of the brokerage automatic sync updates?
The status of the brokerage automatic sync updates is that it's on our list. There's one thing we have to do ahead of it, which is the ability to process kind of a transaction stream and turn that into kind of portfolio positions, which is different from how we do portfolios today. And that's what we're working on. And once that's done, it'll enable you, it'll be much easier for you to manually update your portfolios, because you can just take your transactions from any period and import them all into Stock Rover, and everything will be updated automatically. And we'll detect duplicate transactions and kick them out automatically. Once that foundation is in place, then we're able to go to the brokerage, look at the brokerage piece. So we are very interested in doing it, but I would say realistically it's going to be early next year, not this year.
Okay, and that was the last question. So if you have other questions, please just get in touch with us. The best way to do so is to email us through the feedback button here, and we're happy to take any other. Oh, there are? Am I missing? Oh, I'm sorry. There was one that just came in. What is the status of iPad support, like the phone?
We support the iPad now. We've put a new release of Stock Rover into the store, which has the App Store for Apple, which they should be approving very soon, and that's got some nice additions to it. We've also put the iPhone app in, which is a new thing for us, and I think the iPhone app is designed specifically for phones, so it's I think it has the functionality you'd want to use from Stock Rover at the phone level, and I think it's quite nice. It's both powerful and quite simple. So we're hoping that gets approved soon, so that you'll be able to use the phone app as well. And certainly you'll see us publicize that on the website and on social media when that becomes approved and available.
But you can use it now just by logging into Stock Rover from the browser on your phone.
That's right.
Yeah.
You will get it.
So it's just not a native app, but you can still get it, and it's a good app.
And it also works on Android too, so any Android device will also be supported.
Yep. Okay, and so that was the last question. Unless I did is there anything that I missed?
I think that was it.
Okay, great. So if there was a few comments I'll take offline, and thank you so much for joining me today and learning a little bit about small caps. I hope you found this helpful. Please be in touch with any other questions or comments, and have a great rest of the day.